Hi, everyone. Welcome to another edition of Divorce-a-Palooza. Are you going through a divorce and you've decided to keep the house, or maybe you're not sure if you're going to keep the house, but you need to get a mortgage, or you're selling your home and you're buying a new place on your own and you need a mortgage? So, I am going to give you some great information today. My guest is mortgage lender Tracy Flanagan. She is a lender for Green State Mortgage. And Tracy's been doing this for 25 years. She works with a lot of divorcing women. And hi, Tracy.
Hi, thanks for having me.
Thanks for being here. So, I want to tell everyone watching, Tracy and I don't really have a topic. We don't have anything specific. We just want to give you some good advice, 25 years worth of experience to kind of what to expect, some good tips, and then why working with a credit union like Tracy's, you can get a cheaper interest rate. So, Tracy, what advice do you have for people going through a divorce who aren't sure if they can keep the house? Like, what's the first thing they should do?
So they want to keep the house and they're not sure, or just
They're not sure if
over.
they can afford it. Do you get that
Mhm.
question a lot? Like, I want to keep my house, but I'm not really sure I can afford to stay here.
Yeah, I think what you need to do is you need to figure out what's your income going to be, whether it's yours or maybe you're going to get some separate maintenance or child support, and can you afford your current payment, right? And if you can, then you would definitely want to do like an assumption. And an assumption is where you go to the lender and you say, "Hey, lender, I'm going to assume the mortgage from, let's just assume it's my husband." And they will like kind of requalify you. And the value of that is you can keep your payment the exact same. You can keep the same rate, and then you can just take over the mortgage. That's
Okay, wait, I'm just going to stop you because isn't this sort of a new thing because rates got so high? Like, didn't people always just refinance and get their own name on the mortgage and it was much simpler? Now you have to do an assumption because interest rates are so high that if you have a 3% interest rate and you've been living in your house for 15 years, now you have to get another mortgage and it would be 7%. Is that the reason?
Yeah. I mean, you wouldn't have had a 3% interest rate 15 years ago, so you would have had a 3% interest rate from, say, a small window of opportunity, say 2020 to 2022. That would, like, those were about the rates between the 2.5 to like maybe 3.5%. You're never going to see that again. I don't think we're ever going to see that. So you would want to hold on to that mortgage, for your life. Um,
So if you have a
so
2.5 or a 3%, for sure you want to try to do a loan assumption.
you absolutely do. Yeah.
So Tracy doesn't benefit from that. No mortgage lender does, except for the company who you're with. And you're going to call the same company and see if you can get an assumption.
Correct. You want to call your servicer. So let's say it, whomever it is, and then you want to say, hey, I'm going through divorce and I want to try to assume this loan. And you'll get a lot of pushback because they just don't care. A servicer isn't going to, they're not interested in your, why you want an assumption. But I've had some people come to me and I can't do it because, as you pointed out, like I don't, you know, I'm just giving you advice. This is the best thing for your scenario. And you have to go back to your servicer yourself. And when you go back to your servicer, they just don't care. And sometimes you have to constantly call. I had a client, I'm like, call back, get somebody else. And they got their loan assumed. I mean, it was like, I think it took like 90 days, but it was
Okay,
well worth it.
why is that so hard to do?
I don't know because I've also done assumptions at my company, my current company, Green State Mortgage, and we did it in like 10 days. I mean, again, it was a past client. It was actually the wife. I had talked to the husband the whole time, and then they got divorced. So she kind of reached out, and probably shyly, because I always worked with her husband, but it doesn't matter to me. And
He
we
said,
just
I'm
got it
keeping the
done.
house. I want the mortgage in my name.
Yeah. I
Mhm.
mean, it was just, there wasn't much to it. We gave her it was so easy to do. I couldn't believe it. So to your point, why does it take 90 days? All I can say is sometimes when you deal with a servicer or a bigger company, they just don't care. You're calling an 800 number. They're not well versed. They don't know where to like um, uh, direct you. They
And
don't know.
no one's making money, so nobody has
Nobody's
any
making money, right?
incentive to get it done.
Mhm.
Okay, but I guess the advice then you're giving is push, 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 keep going,
Mhm.
and eventually you'll get your mortgage assumed. Okay, what about someone who's listening who has decided they're going to buy a new home and they've never had a home before themselves and they need a mortgage and they're scared and it seems intimidating, lots of numbers. What's the advice there?
Um, Work with somebody that will understand your needs, because that is a scary process. I mean, there are some people that they've never done any of their finances. Maybe they've been married and one person in that relationship has done everything financially, and now you're just like on your own, and that is scary. But you know what? You can get guided through it. It's there's you just do it, I guess, right? The only way out is through. And you just, we break it down, look at your credit, and then, what's your income? And then what income can we use? Because you might get more income that we can't use, or maybe there's a way we can tweak your income to show more income to get you to qualify. And then, what's your payment? What are you comfortable with? What are you looking for? So you have to be, you know, you have to have goals and then figure it out from there. And a good lender will back you into that, help you.
Okay, and then also, how about how much do you want to put down? And so Tracy, do you ever have conversations with people's financial advisors to say, okay, can you give us scenarios? If she puts down 50,000, here's how much. If she puts down 100, and then you can give people choices.
I have somebody right now, and they were like, they wanted to pay cash. And their financial advisor said, you could do that, but maybe you want to save some of that money because that earns you money, and it might be cheaper or better for you to take out a mortgage. And so we kind of backed it in. Like, what are you comfortable with on a monthly basis? What kind of money are you bringing in? And then we kind of backed into that. And that person wound up getting a mortgage because it made more sense for them to keep their cash. They didn't want to like liquidate all their cash into their house. I mean, your house is great, but that's not a liquid asset.
If you think you might need the cash, or you want to put it in some long-term investments, or you want to
Absolutely.
put it in the market, which has been fantastic over the last few years. But I don't know if
Hmm.
I agree with that, Tracy, because the market's at its all-time high. The financial advisor, it's in their best interest to make sure that you don't put the cash down, because then they're going to get the assets under management and they make money.
Sure.
So you got to think of all these things. But I think if you have a really good ethical mortgage lender and a good financial advisor, you just have to make sure you trust the people.
Correct. And I think just like your financial advisor, and you're right. Like the financial advisor, I mean, at the end of the day, like they make, that's where they make their money, is if you keep your asset there. So I always say, what payment are you comfortable with on a monthly basis? I don't care what your income is. I want to know what you're comfortable with. Because some people have a lot of monthly income, but they wouldn't want what they could qualify for. So it's really about, what you want, what you're comfortable with, and then, you know,
I
keep the rest
actually
in your
really,
investment.
really like that answer. But
Mhm.
what do you say to somebody who says, like, I don't really know?
Well, then we'll default to this is what you qualify for. I mean, a lot of times
Yeah.
you're going from a house and you want to, I have some clients, like they have some really big houses because they had a big family or whatever. Now they're getting divorced, and maybe some of the kids are a little older and they're looking to the future, so they want to downsize. So it's like, what's your scenario? And then we kind of talk about it and we back into it. Like what makes you the most, what are you most comfortable with? And those are numbers, that's like your introduction to like being independent, and figuring out for yourself what's your best scenario. you know Nobody can tell you, not me or your financial advisor. You just have to, you have to have some comfort level and figure out your numbers.
Okay, and what are interest rates today? Like, just give me an example of like an average of what an interest rate is today for like a 30-year fixed mortgage.
Sure. So on average, like today's rate is 6.625%.
That's
So
not terrible.
No, it's not.
And actually, I think what happened to all of us is we got so spoiled hearing about these 2 and 3% rates. And so everybody, I remember buying places when in my 20s and 30s when rates were 5, 6, 7%. I didn't think anything of it. Now it's like, ooh, that's so high, but it really isn't.
No, it's not. It's
Mhm.
I went through my parents, their scenarios, their financial uh, package. They've passed away, and I was looking through things, and the first mortgage they had, they bought a house for $60,000. They put 20% down, and their rate was 9%, and they paid a point like there was a discount point. I mean, it was crazy, and I think that was 1976. So
Oh, I was
2 years
gonna say
ago.
maybe it was when Carter was president. Remember the rates were like really high?
Well, it was during Reagan's era. Yeah. So I think, what did
Oh,
it go? Carter and
interesting.
then Reagan and then, yeah.
Wow. All right,
But
now go ahead.
no, they came down. So,
Okay, I have a question. So I want to tell everyone watching, Tracy works for Green State Mortgage. If you're interested, by the way, in working with her, you can find her at greenstatemortgage.org. No, it's just greenstate.org.
yes,
Okay.
greenstate.org.
Or you can find Tracy in the trusted professional section of Divorced Girl Smiling. But what I want to tell everyone watching is that, and this is a question I don't even know the answer to. So Tracy
Mhm.
works for a credit union, a subsidiary of a credit union. And I've heard from like a couple real estate agents, oh, work with Tracy because she gets less expensive rates. Why is that?
Well, two reasons. One is the model that our company has decided to go with is we really want to give the best to our members, our clients, and it's very important to have a really good rate. Some companies don't operate that way. It's kind of like maybe they have shareholders, and then you have to think about earnings per share, and so that can drive up the cost of rates because of earnings per share. Green State is a private company. We're also, because we're a credit union, we're a not for profit, and we're exempt from certain taxes. But we give those back. We give that savings back to our members, and our members are anybody that is gets a mortgage. So you have to have a checking or a savings account to be a member at a credit union. I really didn't even know the value of that, but we got acquired. I've always worked for a bank, and I've been pleasantly surprised. Like,
How long have you been there, including the bank that got bought out?
so I've been a lender for 25 years, but we just got acquired 2 years ago. So I've worked at a credit union, but I've done a great job. I love this company too. It's just
Now, when you said rates are 6.2%, is that Green State's rates or everyone's rates?
it's 6.625, not
Okay.
6.25
Okay,
yet. But
6 point,
I like
okay.
I like the projection though,
Uh-huh.
Jackie. Thank you. No, I think our rates are definitely lower for sure. I
So
think,
you were quoting the Green State rate.
I was. Every
Okay.
every
Because
lender
when you
can.
said because when you said 6.6%, that sounded low to me. I thought they were still in the sevens.
Well, they can be for certain clients and certain
Yeah.
products. So,
Yeah.
but like when we give out rates and we do kind of do rate sheets, we just give it like an overall rate. But that's very, yeah, 6.65 would be my rate today if you
Mhm.
had a decent credit score, and things like that. Now my FHA rate, so I had somebody, I don't know if you want to hear this, they had low credit. So they had 620. That's a little on the low side nowadays. So that interest rate was going to be 7.5% because they're putting 5% down. But then I looked at the FHA rates and I can get them 6.25. So we're going to take them FHA because that's a way better product and it saved them a ton of money.
This is why people should work with you. Tracy,
Thank
thank you
you.
so much for being on Divorceapalooza.
Well, thank you for your time, Jackie. I appreciate it.
And like I said before, if you want to find Tracy, go to greenstate.org. You can also find her in the trusted professional section of Divorced Girl Smiling, which is divorcedgirlsmiling.com. Thanks so much for watching, everyone.